Hey everyone, so the second half of this video is going to be a trade review of PLTR and how I added to a winner and how it pretty much went perfectly executed. And then I took a shower and realized that I had the exact opposite trade take place right before that, and I have to include that in this video as well to certainly remain fully transparent. So the trade that I'm about to go over is the worst trade that I've taken in 2 weeks. That does not mean the biggest loser. That has nothing to do with it. And I'll talk about the reasons as to why it's the worst trade. First off, the setup, I've been in a really, really strong hot streak of just consistency. This is the best 2-month string of consistency that I've ever had as a trader. It's not my biggest wins, but it's my most consistency. And this is only 1 month of data, but this is pretty much what the last 2 months looks like, where it's just can't do anything wrong, complete flow state. And if you want more information on flow state, Google TheChartGuys flow state. I talk about that in some other videos, but just ideal scenario when you are a trader and in the zone. So I headed into this morning with NIO, and if I had to pinpoint as to why I traded poorly, it would be that I sat at the computer and said, I don't know if I'm going to trade today, and then I saw this trade setup, but I guess mentally I wasn't prepared for it, and let's go over it. So I have been trading NIO a lot the last 2 weeks, and NIO and Tesla day trades have a lot to do with the consistency that I've been seeing. I've gotten very comfortable with it, and it's important to get very comfortable with a couple individual names. If I'm trading a ticker for the first time, I am not treating it the same way as my good buddies Tesla and NIO. And that's the case with PLTR. I'm using smaller positions on PLTR. Number one, it's more volatile, but number two, I am just starting to date it, so to speak. And I've been married with Tesla all year, and NIO is a recent couple month fling, but we're getting really comfortable with each other at this point as well. And just as an analogy, I choose when I risk my money. I choose how much money that I risk. Let's just say I'm a really good wiffle ball player and I got a wiffle ball team and we bet on games. Am I going to bet the exact same amount of money on my home court, my home field, that I am when I'm going to play on someone else's field? I've played on my field 1,000 times. That is where I am most comfortable playing that game. So if I am looking at a ticker where I am most comfortable playing this trading game, it is not the same as if I'm trading something for the first time. So it's smaller positions and it's getting accustomed to things because there's very small nuances as a day trader that you recognize with tickers and how they differ in how they trade. Bigger picture, in 2020, I have seen more support and resistance price level breaks straight into a move in the opposite direction than I've ever seen before. And you could point to a number of things of what could it be. Could it be market makers taking advantage of a huge wave of newer traders entering this market? That's a possibility, but it's just been very noticeable. And because of that, I've been playing a lot more falling wedges and rising wedges and also broadening wedges, because the hallmark of all those wedge patterns is breaking support, not seeing follow through, and then bouncing, or the opposite if it's a rising wedge, breaking resistance, no follow through, straight into a drop. So that's the backdrop for 2020. NIO does that more than any stock I've ever seen. And I have been shorting bull breaks of NIO for weeks at this point. And again, I am not telling this, the purpose of this video is not saying, don't stop out when support or resistance breaks. It's just highlighting what requires dozens and dozens of hours of observation, tweaking, and trading both mistakes and victories to learn how this stock trades. So heading into the morning, knowing all that, huge day yesterday. Bulls in complete control. Look at how the market makers shift. The faster that market makers can shift your emotions from maximum FOMO to maximum fear, the more money they make. That is the number one goal of a market maker. So when we're seeing this kind of drop, we had euphoria, blue sky breakout, all-time highs into a 30% drop. And that 30% drop was marked by maximum fear, headline fear, huge gap down open, extreme euphoria 6 days before, into extreme fear 5 days later. And today, they did it again in the opposite direction. All bulls yesterday, one of the strongest oversold bounces I've seen in a very long time, massive dollar volume, insane confidence, and bears didn't stand a chance. We started this morning, and I looked at this 5-minute time frame and I said, okay, that could be a head and shoulders pattern. I know the high of yesterday is $48, but it's possible that we break $48 and either fail from breaking that high. This is what I was looking for. first thing. So breaking the high of yesterday, $48, would be just fine, but I wanted to see a rejection from the high of pre-market. This is the setup that I was looking for. So I did not prepare well for the break of the high of pre-market straight into the all-out dump, and it cost me. I had a beautiful short entry. I entered at 48.31 and I was stopped out at 48.61. I gave 11 cents of wiggle room, less than that. 9 cents of wiggle room above the high. That's inexcusable for me. Why? A number of reasons. Number one, this was less than a third of a day loser as my risk. So if I put my stop at 48.81, I'm risking half a day loser. That's easily acceptable. My stop was way too tight. Number two, and the only reason I could think, why did I put that stop too tight? Because I was a little bit rushing into this game plan, and I wanted to keep that loss small because I didn't feel prepared. This is all subconscious analysis of what was going on and speculation to some degree. So we then broke that resistance level, went straight into a 7% drop in 6 minutes from that high of the day. And you better believe as soon as that happened, as soon as this 1 minute candle happened, explicatives started coming out loud out of my mouth because I knew that I had messed up and that we were about to dump. At that point in time, I'm not going to chase and jump in bearish. I patiently waited and I played this bounce. And I played this bounce pretty well to get enough gains that it made me not care about the mistake as much anymore. But it's important to still review that mistake and look at what I did wrong. And the good news is that mistake was followed by this really good PLTR trade that we're about to get into, and that breaks the streak. You know, I still got my flow, bigger picture over the last 2 months to be able to go from that big loss, that big mistake, and that's the kind of mistake that you make when you're in the opposite of the flow, when you just can't do anything right and you're banging your head against the wall and the really tough times, which fortunately has not happened a lot recently, but I certainly am aware of them, having gone through them. So to be able to go from that big mistake straight into a really well-executed trade tells me, all right, you're still in cruise control, nothing to panic over, learn from your mistake, stay in the zone. So let's get to PLTR. Hey TheChartGuys members, so this is an impromptu trade review video. Wasn't planning on even making this trade, but it smacked me in the face right before I could get off the computer. So this is PLTR, and I was in a swing position from the bounce yesterday, very small position, and I needed a 10% move in either direction to be a day maker or a day loser. Fortunately, we got the day maker today, but I'm holding that position because just looking at this daily time frame, normally I would anticipate a daily lower high, but a bit more follow through. So my target this morning was just under $26, and we got real close to my target, and then that consolidation started. So I'm holding a small position as a swing. I am a lot more comfortable trading size when I'm day trading. Smaller, quicker moves, tighter stop levels. So I was looking at this pullback from the high of the day, and we ended up pulling back 6%. So I'm looking at my time frames, and I'm saying, okay, what's the most clear? I'm looking for a 15-minute high or low, anything above the low of the day, and here comes the EMA 12 support as a visual target. Great. I'm going to be looking for an entry. So I zoom into the 2-minute time frame. I see a clear lower high and lower low. I see a bit of a waterfall from 25 down to 24. That's over a 3% drop with no real bounce. I'm comfortable scaling into that with that 15-minute high or low, and also the backdrop that I am profitable in my swing position. So this is adding to a winner. And if I start scaling in and then worst case scenario happens and we just free fall to a new low of the day, pretty much it would be a break-even scenario. So the positions that I'm scaling in, let's just for simplicity's sake say that my swing position is one share, we'll call it, and these day trade positions are 2 shares each. So I scaled in 2 positions, and my entry was 24.28, we'll call it, and 24.21. So 2 entries, and now I have 5. So I literally just 400%ed the size of my position on that scaling. I then do my really quick flip where I sell half of that at 24.41, and so that was a 13-cent gain on this, which means my 24.21s that remain, my break even is now 24.08. And that 24.08 level is below the low of this consolidation, which ended up being 24.15, and then that bounce started. So I sold half of my position into this 2-minute bounce, and then I know I'm just looking for a 2-minute lower high. I'm looking for an entry on that 2-minute high or low. So I went back to adding. At this point, I have 3 positions. My swing, and then a size 2, that's one of the positions that I have left from that flip. So then I start buying that 2-minute high or low. And now I've got a really clear stop level at 24.15. So I double up again. Now I'm up to 5 positions again. No, I'm more than that at this point. I'm up to 7. So I had my 3, 4, 5, 6, 7. I am now 600% larger than my swing size position, and I have stop levels real close that I'm playing off of. We then got the 2-minute confirmed trend change. Higher low was set, scaled in my 2 positions, and then on this move, I scale out. I sold one of them right at this resistance to be a bit cautious just in case we reject. So sold that at 24.56, and then I sold my other one when I started noticing a little bit of a red flag. I don't like this pullback that's going on obviously right now while I'm talking. So I exited a second position there at 24.46. So that goes back from 7, now back down to 3, because each of these is 2. So at this point, I've got my one swing trade with a break even of about 22. And then I had a day trade position where after selling half, my break even was 24.08. I then sold these 2 halves. So let's see what that drops it down to. 24 cents on that one and 13 cents on that one. So 37 cents off of the 24.08 average, which is 23.71. So now this day trade position, which is twice the size of my swing position, has a break even down at that level, and I cannot lose on this current day trade position. So I've got to stop under $24. Obviously, again, I don't like this action that is occurring right now. 5-minute back down to hit that new low, no follow through, which is a good sign, but going to be protective. So I put my stop under 24 and I'm risking nothing, only profit. Best case scenario, we get some 15-minute bounce follow through back to $25. If that happens, that's more than a day maker on my new day trade position that I have added. So I'm doing nothing with my swing trade. It's a very small position that I'm going to let ride a little bit longer, maybe even a few more days. And I have entered and positioned myself with the day trading position to maximize any potential profit with 0 additional risk. And that's where we stand. And the premise of the whole trade is already being up a day maker in my swing position and being really comfortable only risking profits to try and set up a bigger position for this 15-minute higher low. Feel free to ask any questions. That was a little bit choppy in terms of my explanation, but hopefully it was some insight.